Oops.
Good morning. I'd first like to take a moment just to thank you all for your support during the last couple of months that, of course, have been very challenging given the passing of LuxFLAG's general manager, Sachin Bankalas. Sachin was a great human being, a tireless supporter of sustainable finance, and he exemplified LuxFLAG with his ambition, passion, and drive to move sustainable finance forward. So welcome to our first physical digital event, hybrid event. I think this is what our future will look like in the future for future events. As chairwoman of LuxFLAG, I'm very pleased to see that after two editions of the LuxFLAG Sustainable Investment Week, we've already gained recognition. And that is thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. Given the finance industry is on different stages of that journey, I think this week is about sharing best practices so we all advance towards the goal of making all finance sustainable. For this third edition of the LuxFLAG Sustainable Investment Week, I'm really impressed and so happy to see such a positive response with over 3,500 registrations for all of the events during the week. It's really amazing, and I'd like to thank the host partners and the media partners as well. And finally, the 25 sessions over the week will cover the most pressing trends, the most pressing issues in sustainable finance, and we hope you find them useful and instructive and inspirational. So 2 housekeeping points. We will be sharing the slides and the presentation about a week after the sessions end. And for those of you watching online, you can ask questions by clicking on the 3 small dots at the bottom right of your screen. So I'm very pleased to introduce this session hosted by Candriam and the Luxembourg Stock Exchange. It's again, our first hybrid session, so thanks to the Stock Exchange for making that happen and for your beautiful premises. And thank you also for organizing this joint event, because I think a joint event is an interesting way to show that we do work together in the ecosystem. So today's topic is Oncology Impact, Giving Life Back. Laetitia Hamon, Head of Sustainable Finance at the Luxembourg Stock Exchange, will make some opening remarks, and then I will introduce our speaker. Thank you very much.
Thank you, Denise. Good morning, ladies and gentlemen. It is with great pleasure that I welcome you on behalf of LuxSC and Candriam to this unique session on oncology and impact investing. We're extremely proud to support LuxFLAG Sustainable Investment Week again this year, and I have a special memory too for Sachin Bankalas, who left us earlier this year. He made a big difference to LuxFLAG and to the broader sustainable finance community, and he would have been proud to see the continued success of the sustainable investments. At LuxSC, we're fully committed to the week's overall theme, which is putting sustainability at the forefront of finance. Today's session carries the title Oncology, Impact, Giving Life Back, and looks at the ambition shared by so many people across the world. How can we contribute to make cancer a curable disease? And what is the role of finance in achieving this goal? While progress for curing cancer is being made, the market for solutions offers an enormous investment opportunity. Today's session will focus on how finance can bring a positive change by combining market rate financial returns with a clear social impact. Over the last 18 months, the social component in ESG has gained momentum, with health and access to adequate healthcare becoming center stage. The pandemic has prompted investors to really look at what their money is going, and further increasing interest in impact investing pursuing social goals. According to the Climate Bonds Initiative, issuances with social themes quadrupled in volume during the first half of this year, if you compare it to 2020. More than 30% of these issuances been issued by the EU under its SURE program, whose goal is to help protect jobs and workers across Europe in sectors heavily impacted by the pandemic. The program will contribute to the advancements of the United Nations Sustainable Development Goals, especially SDG number 3 on good health. We are happy to share that all those social bonds relating to this program are listed here at LuxSC, and displayed on the Luxembourg Green Exchange. Finance truly has the capacity to bring about important changes, including in health and modern medicine. Let me give you a concrete example. Last September, Luxembourg issued Europe's first sovereign sustainability bond worth 1.5 billion euros, which is displayed also on LGX. And recently, the Luxembourg Sustainability Bond Report was released. And in it, the government gives updates on the projects being financed through this bond. And that includes the South Hospital core hospital activities with outpatient clinics and nursing stations, and new departments for psychiatry, geriatrics, as well as a new cancer center. Last year, we decided to go beyond our core activities as a listing venue for sustainable bonds, and we entered the field of education and sustainability data. The LGX Academy offers courses to enrich participants' knowledge of sustainable finance, and this has proven to be a huge success up to now. We also entered the data space with the LGX Data Hub. And that is a centralized database of structured sustainable data on more than 3,200 sustainable securities, and that is close to the entire universe of listed GSS bonds worldwide. The LGX Data Hub provides investors with the data they need to understand and compare the environmental and social impact of their different securities. And it helps them build sustainable investment strategies and report on these investments. What is more, users can search for bonds according to the SDGs, which the bonds proceeds will contribute to. So if you would like to contribute to SDG number 3, for example, you can look and search for this one in the database. Beyond these innovations, I'm also happy to share with you that we are about to launch a revamped version of our LGX fund section. LGX will soon offer 2 investment fund windows for funds listed at LuxSC, one for ESG funds, which corresponds to Article 8 of the Sustainable Finance Disclosure Regulation, and another one for impact funds, which is dedicated to funds that are aligned with Article 9 of that said regulation. This new classification of funds reflects the self-categorization made by asset managers. Our role here is to enhance visibility of these funds and provide these classifications to a broad public through our UN award-winning leading platform for sustainable securities. This is a first step that will enable investors to make their due diligence on these products. And if they need to, they can also seek for labels, for quality labels, such as the LuxFLAG ones. As concluding remarks, I'd like to stress that finance needs to form part of the solution to our global challenges. To reach the global goals, massive amounts of capital need to be mobilized and reoriented into investments that make a meaningful difference in our people's lives. As a market operator, LuxC has the power and the duty to facilitate access to capital, to increase transparency, and to shape financial activity in support of health and modern medicine, along with a series of other societal impacts. Today's event promises to bring you new insights on impact funds. I hope you will enjoy it. Thank you.
Thank you, Laetitia. And in fact, in listening to your comments, one word kept coming to mind: innovation. So well done to the Luxembourg Stock Exchange for being innovative and continuing to be innovative. So it's my pleasure now to introduce Ken van Weyenberg, excuse me, Senior Client Portfolio Manager, Thematic Global Equity at Candriam. So Ken will speak on oncology impact, giving life back. Do forgive me for mispronouncing your name, Ken.
Good afternoon, everybody, and thank you for joining us in this hybrid session. So I will be discussing our oncology impact strategy today. And this strategy has been launched at Candriam in November 2018. And since then, performance has followed, commercial success has followed, but it remains obviously an important answer to a huge social challenge that hits us all. Because when looking at the recent figures, despite recent improvements, we see that cancer continues to cost a lot of lives, and much more people are being impacted by this terrible disease every day. We'll see later on in the presentation. Fortunately, we see that also innovation is catching up, and that everybody is investing in basic research, in treatments with less side effects, and also health authorities are becoming more and more pragmatic. So, for instance, the FDA, that's the US health authority that also has approved the famous COVID-19 vaccines last year, has allocated a lot of resources, extra resources, to the examination and the validation of new treatments. And this results, of course, in a lot of new NME approvals, new medication, new treatments that come to the market and that are put at the disposal of oncologists and patients. And of course, at Candriam, we don't not only want to have a performing fund, we want of course to invest successfully the money of our clients in a financial portfolio. But what's even more important is that we want to have a double impact with that. First, we finance companies by investing in them. And secondly, we also try to contribute to cancer research by investing 10% of our net management fees or giving it to leading cancer research institutions around the world. I'll elaborate a bit more on that later on during the presentation. So why is this so important? Why did Candriam decide to launch a fund that is an answer or part of the answer to a big social challenge, namely called cancer? Because cancer remains the second leading disease in the world after heart diseases. And it costs only in the US around 1,600 deaths a day. That's huge. In addition, we all have a 40% chance in our life being diagnosed cancer. That's huge, and that's often very much underestimated. In addition, cancer is a very complex disease, and many people are hoping for one solution that will probably never come, because there are too many types of cancer, and for each type of cancer, there is a specific therapy, a specific treatment. And this, of course, complexifies the task of medical professionals and shows that we have a huge challenge before us to make cancer a curable disease. Now, I know this presentation starts off dramatically, but I must say that we try to focus on what's heading into the right direction. And with over 1,700 new treatments in development as of today, that will probably lead to an increase in survival rates and perhaps make cancer a curable disease in the end. Now, we're finally going into some good news with this timeline that shows the developments that have been made over the past year in cancer treatment. Generally, a patient that was diagnosed cancer between, let's say, the Second World War and the end of the 1980s had two possibilities: surgery or chemotherapy, or, yeah, of course, a combination of both. We had to wait until 1997 until Roche had the approval of Rituxan, the first targeted antibody treatment that was a big step into the right direction. But for the real developments we're facing now, we had to wait until the beginning of the new millennium. That was a time that we saw the creation of more targeted treatments and, for instance, Immuno-Oncology. Those are treatments using our own body, our own immune system to fight cancer. And there are two important advantages of Immuno-Oncology. The first is that we make sure that our body recognizes cancer more easily and enabling it to stop reproducing the cancer cells. Secondly, we reinforce our own immune system to make sure that our own cells become stronger than the cancer cells in our body that are destroying us. And that is a very big step into the right direction, because not only are treatments more efficient, they also have less side effects. And that's of course very important for the patient's comfort. Now, this creates, of course, a huge market because we've all started to recognize the dramatic unmet medical need to treat cancer. Science has evolved, and finally, in the end, companies have started to see an attractive commercial segment within oncology. And these three factors lead to a market with a huge growth potential and, of course, lots of innovation. Innovation can be made on various pillars. So we have represented 5 pillars on this slide. So the first one we already discussed. So of course we see that companies are investing more and more in basic research to better understand where cancer comes from and how it can be treated. And secondly, this has also resulted in better treatments with less side effects. And of course that's pure biotechnology, pure pharmaceutical companies who are engaged in finding the right solutions. But of course, it's even important to improve diagnosis, because the earlier cancer can be diagnosed, the earlier we can start a more targeted treatment, and the higher survival chances are. So that's very important. And thanks to the creation of a whole new series of tools on the market, such as liquid blood tests, for instance, companies like Immuno can really make a difference. Besides better treatments, besides better research and diagnosis, profiling has also become very important. As I said earlier on during the presentation, there are more than 100 types of cancer. And thanks to profiling, on the back of artificial intelligence developments, we can see where the tumor, for instance, comes from. And we can not only treat the tumor itself, but also try to tackle the cause that caused the tumor. That's equally important. And then finally, we also have better technologies. And of course, when I talk about technology in medical development, I also talk about robot-assisted surgery, for instance. Robot-assisted surgery has a lot of advantage. For instance, smaller incisions reduce scarring. A reduced blood loss reduces the risk on infections. And finally, the hospital stay is being reduced, which is, of course, very good for the patient's comfort. And there are, of course, a lot of companies worldwide active with a competitive advantage, like Intuitive Surgical, that interest us and that have a lot of upside potential. So we believe that improvement, innovation in these 5 pillars will finally lead to a better outcome for cancer patients in the future. And as I said earlier on, cancer is a social challenge that is being translated into figures. And we can see now that the therapeutic field of oncology, that's the rose or the red dot you can see on the graph, has the highest growth rate of the entire healthcare sector. So it grows at around 8% per year and is worth more than $100 billion as of today. Now, when going back to the investment portfolio, what do you need to build a successful investment portfolio that is as purely as possible invested in oncology-related companies? Well, you need a team of medical and financial experts. So the team is managed by 2 fund managers. The strategy is managed by 2 managers. So you have Rudy van den Einde, who is responsible of the thematic global equity team at Candriam since 2011, and manages also one of the best European biotechnology funds. And he is assisted by Servaas. And both strategy managers are then assisted by 3 analysts. And that's really important because most of the team members have both a finance and medical formation or experience. And that's truly a competitive advantage if you want to create a portfolio that is as purely as possible related to oncology and has truly not only an impact on the social challenge, but also performance-wise. So for instance, when you see the Servaas Michielsen, he has a PhD in bioscience and is also a charter holder CFA. Malgorzata, for instance, has a PhD in biochemistry and biotechnology and has previously worked as a scientific researcher on cancer. And then we also have Pierre, for instance, who recently joined us, who is specialized in medical technology, as we want to invest in companies throughout the entire value chain of companies contributing to the fight against cancer. Now, how do we select companies? How do we build an investable universe? So we start with a worldwide universe of 25,000 stocks, and we already filter out companies that have a market capitalization of less than $100 million. Why do we do that? First, for liquidity reasons. Second, because a lot of small companies in medical research lack transparency in clinical data. And that is, of course, crucial for us in order to determine if a company is going to the right direction with certain treatments. So after we've filtered the companies with a market capitalization of more than $100 million, we start our first thematic screening. And for that, we use an artificial intelligence-driven search engine called AlphaSense. It filters out every company that has a significant exposure to the fight against cancer. And then we arrive at a broad investment universe of around 600 stocks, on which we will apply an ESG exclusion, so based on the UN Global Compact and controversial activities. And we'll then do an in-depth thematic review, looking at the social aspects of each company. First, we look at the transparency of clinical data. And secondly, we also look at the advantages some developments in certain companies have for the patient's comfort. That's a key point for us, for a company to be included in the final reduced investment universe. After those screenings, we arrive at an investable universe of around 300 names in which we're going to look for opportunities in companies that can already be profitable, but also early stage non-profitable companies. For profitable companies, it's quite easy. We'll do a classic financial analysis. I'm not going to go into detail of the financial process, but we look at management quality, growth of the underlying market, competitive advantage, value creation, leverage. And then finally, we're going to do an in-depth valuation exercise with the discounted cash flow method to arrive at a fair value and to start composing our portfolio. Of course, companies that are still in an early stage and are not yet profitable should be analyzed in a different way. And here, in this case, the expertise of the team and the medical formation is crucial. So we've once again built sort of investment process based on 5 pillars. The first is drug characteristics. We're going to take a look at the clinical data that are being published by the company in order to determine whether it's a treatment that can help certain cancer patients or not. Secondly, we're going to take a look at the therapeutic landscape. And we're going to compare the treatment in development with other treatments that are already available on the market or that are being developed at competitors. Thirdly, we're going to do an estimation of the market potential, looking at the potential patient size as well. And then we're going to analyze the management and its transparency, because of course, transparency is key in order to have a good view on the company's quality. And then finally, we'll look at financials. And of course, we know that financials are important, especially when investing in equities, but we're a bit less strict. We know that early stage young companies constantly need financing. So what the focus of our fund managers here is the forward-looking strategy and the pipeline under development and the cash burn. So in case of these early stage non-profitable companies, clinical assessment is more important than a valuation exercise. And also from a financial point of view, that makes sense because when you're looking at sectors that are disruptive, that have high innovation rates, when you look only at multiples like price earnings, for instance, you never buy these stocks that can make the difference. You never buy them. And then when looking at the performance later on during the presentation of the strategy, you see that it makes sense to really analyze into detail all clinical data we receive from the companies. Now, of course, we're not alone to analyze those clinical data. we start our screening with an own analysis. So we receive the data from a company, we start analyzing it, and we're going to conference in order to spot interesting pipelines that can really make a difference for certain patients that suffer from cancer. And within oncology, but mainly in the broad healthcare sector, you have the advantage that all these companies that are developing treatments are really open, transparent. And they need to be, because they need to show clinical data and they need to find patients that want to engage themselves in participating in clinical data and the further development of certain medications. Of course, we also need someone who can vet the ideas we have. We want to expand our knowledge through independent expert network, GLG for instance, and we want to try to refine our sales estimates at that time as well. And vetting is really important because you might have different opinions on certain cancer developments. I'll give you an example. For instance, you might have a cancer treatment that seems to be working a little bit better than an existing one, but has more side effects. And sometimes for a cancer patient, these side effects can be horrible. So you don't want to lose your hair, you don't want to be sick. And of course, when it's something that's a little bit better than an existing treatment, but gives you a lot of discomfort, then we will not invest in those types of solutions. So not only the clinical assessment, the true efficacy of a certain treatment will be important, but also the result or the impact on the patient's comfort will be highly important for us in our assessment. So, and then when we have finally executed our whole investment process, we arrive at a portfolio that looks a bit like this. So you can see the portfolio properties on this slide. When you look at the regional diversification, I must say the portfolio doesn't deviate too much from the MSCI World. Also, when looking at split based on market capitalization, you can see that we have a good balance between large caps, mid caps, and then some small and micro caps. And because from a financial point of view, you also want to build a sort of stable portfolio that, of course, invests in companies with a huge potential based on their cancer treatments and development. But you also want to have something stable that can perform over time. And then when looking at the split per sector, of course, this remains in the first place a healthcare fund. So you have a big, almost 2/3 of the portfolio invested in biotechnology firms and pharmaceutical companies, but almost 25% until 30% of the portfolio is also invested in, for instance, artificial intelligence, robot-assisted surgery, medical imaging assisted by artificial intelligence, and so on, to really capture the full value of all companies that can contribute to the fight against cancer. And at Candriam, not only financial performances are important, mainly when we're talking about this type of strategies, we also want to support leading cancer institutions around the world. So in Luxembourg, we work together with Chris Bank Kenner, but in other regions, of course, we work together with other leading institutes around the world. And we donate 10% of our net management fee that can be to a general organization, but to specific projects as well of those types of organization. And this is, of course, very important because we support cancer research, but we also keep innovation going. And I'll show you why innovation is so important. This is an example of innovation we have been seeing in Immuno-Oncology related to the treatment of melanoma cancer. So you can see on the graph the time horizon, that's the x-axis. So you can see that the amount of months after the diagnosis of cancer, and then you can see the survival rate on the other axis. And you can see a patient that suffers from melanoma that is being treated by chemotherapy has only a 20% chance of survival after 50 months after the diagnosis. So that's really terrible. Only 20% survives after 50 months. And thanks to innovation and the creation of immunotherapies, you can see that's the line in yellow, I think, yellow-orange there. that finally survival rates increased to 70%, even 18 months after the diagnosis. And you can also see that the curve is flattening, meaning that there is hope for the future that more and more people will survive thanks to innovation in immuno-oncology. And within this type of cancer, melanoma, as example, survival rates will continue to increase. So we have some estimations here that when all these investigational innovative treatments will appear on the market, and of course they won't appear on the market as a whole, only 15 to 20% of all treatments in development will finally be commercialized. But by 2025, the survival rate will increase by 72 months. So that's quite impressive, and that's why it's so important also as an investor to invest in these type of companies to finance research and development in innovative cancer treatments. Now, how can we measure the impact of our strategy and what are the main performance drivers? So one of the main elements to measure the impact is looking at new molecular entities that are being approved by health authorities. New molecular entities that are treatments that are completely new. And you have sometimes treatments that are being a bit rebuilt, a bit tweaked, left and then the right, and are then approved again by the health authorities. These are 100% new treatments that appear onto the market. So we've had 48 in oncology in 2019, 53 in 2020, and the biggest part of new treatments that appear onto the market are in the oncology space. So you can see that innovation is clearly catching up. And when we look at the winners of 2020, you can see that we were invested in 80% within our portfolio. So that shows that clinical analysis is truly important to build a successful portfolio. And this is, of course, not only good for the outcome of cancer patients, it's, of course, also an important performance driver for our clients who are invested in the portfolio. A second performance driver is then merger and acquisitions. You can see that a lot of big pharmaceutical companies come onto the market every year to fill up their pipelines, and they find innovative treatments with smaller biotechnology companies. And of course, merger and acquisitions contribute positively to portfolio performance, but also make sure that some innovative treatments can really be commercialized on a global scale. So the first full year after the portfolio strategy was created was 2019. So we've had 4 companies being acquired by big pharmaceutical companies, 5 in 2020, and since 2 weeks, 3 in 2021. And it shows that the clinical assessment of the data of those different companies not only results in better treatments coming to the market, but also in takeovers, good pharmaceutical companies that buy biotechnology companies and then commercialize the products they have in development. So this is, of course, also a very important performance driver for the strategy. And the strategy has performed pretty well since inception. So in this graph, you have the MSCI World and MSCI World Healthcare in gray and blue, and you have the performance of the strategy in yellow. And of course, last year, during the COVID-19 pandemic, the healthcare sector as a whole performed pretty well. And also the oncology sector has performed pretty well last year during the COVID pandemic. Now, we've looked at developments, we've looked at achievements. So what can we expect going forward? First, it's really important to notice, I think, that the oncology sector or the broader healthcare sector is one of the sectors that is less likely to be impacted by budgetary cuts of governments that have invested a lot in the economy over the past years to prevent the propagation of COVID-19 to cause a global economic crisis that continues to last during the years. So I don't think that governments will try to impact the healthcare sector by doing budget cuts over there. Instead, they have started to recognize the importance of healthcare and have increased investments in most of those domains, especially in the European Union. Secondly, we see that innovation continues to improve, and that more and more people have a broader access to good quality healthcare. And then finally, you have also a catch-up of innovation, medical innovation in emerging markets, China in particular, that has expected growth rates between 8 and 50%. So globally, the oncology market, and this is not only the therapeutic field, but also includes medical imaging, for instance, will grow at around 10% a year up until 2024. So we can see finally that cancer remains a huge social challenge. Innovation is going, but should continue to be supported by investing companies, but also by charitable organizations. And finally, the outlook looks better, and we hope, of course, when we have better treatments, when we have better profiling, when we have better technologies and better treatments with less side effects, we can finally make cancer a curable disease. That is our final goal. Thank you very much for your attention, and I'm, of course, very open now to all your questions.
Thank you, Ken. Are there any questions for Ken? I have a question.
Okay.
I'll speak loudly here. I'll sit here. So we obviously with COVID-19 and the vaccines, we saw, the use of, or the successful use of the mRNA technologies with the BioNTech, Pfizer, and the Moderna vaccines. Is that going, so that kind of takes us a bit down the direction of a personalized treatment? Is that going to happen soon? Is it going to transform, this industry?
At first, I think it's important to say that mRNA is an innovation that happened long before COVID. So that's the first one. It has been used to develop more quickly a COVID vaccine, which is of course very good and allows us to be here in this room together. mRNA as a cancer vaccine, that might be more difficult because the first thing is that there are a lot of types of cancer, so it will be very difficult to find a specific vaccine that covers all types of cancers. Secondly, we see that the successes that some of the companies have had so far in mRNA vaccines for cancer are really limited. So we're a bit afraid that this technology won't be able to come forward as a solution in oncology. Nevertheless, you have big pharmaceutical companies who are allocating a lot of money to that sort of developments. AstraZeneca, for instance, has bought a small company that is engaged in mRNA technology, and they will try to develop, nevertheless, a sort of cancer vaccine. Because that's very important, because AstraZeneca is a good example of a company that not only invests to gain money, but they always invest for the patient's comfort. And we've seen that also with the COVID-19 vaccine. Despite that their vaccine was not so successful as the one from Pfizer, they've sold it to their production price. And I think that's also a very important angle for those types of companies. So to answer your question, I'm sure that companies will continue to look for a sort of cancer vaccine, mRNA or other technologies. Will it happen soon? Probably not. But of course, we're very happy that they will continue their research in hope that in the end we can make cancer a curable disease and perhaps prevent cancer when we know the disease better than we do now.
Okay, thank you, Ken. I see we have a question from the audience. Maybe you could just read the question out loud if you don't mind.
Do you know the profile of investors investing in oncology? The profile, what is meant with that?
Type of investors.
Type of investors, yeah. We have a broad range of investors. So we have retail investors who are invested in this type of strategy, but we also have for instance, healthcare organizations or pension funds who are interested in this type of strategy for two reasons. Of course, for the performance, but secondly, for the fact that it is a type of sustainable impact fund. those type of funds will become more and more important in leading financial organizations as well. So it's quite clear that they target these type of investments as well. And perhaps now that we're talking on sustainability and on impact investing, so the fund is currently in Article 8 and will probably pass to an Article 9 in the beginning of next year. And we've added some key performance indicators, such as the percentage of directors in the global board that has a scientific background, for instance. That way we can measure the innovation in companies that are putting forward extra resources to fight against cancer.
I actually have another question. Thank you very much for your very insightful presentation. I was wondering, how long do you, in average, stay invested in companies, especially the ones that are not profitable?
Mm-hmm. Yeah, it's absolutely a buy and hold strategy. So this means that we have a very low turnover, and turnover is around 30%. So mainly we invest in companies for 3 to 5 years. Of course, we tweak a little bit to the weighting, depending on the valuation of certain companies. But as long as the clinical successes and transparency doesn't change our investment case, we remain invested in most of those companies contributing against the fight against cancer.
And there is another question from the audience there.
Another question on the geography of innovative technologies. Where are they mainly located? Okay, that's a good question. Medical innovation is also a center point in the US, but we're also very strong in Europe for certain technologies. And one of the stocks we like a lot, and we're also invested in the portfolio, is Siemens Healthineers. So that's a company that produces equipment for medical imaging based on artificial intelligence. So they have around 40 solutions on the market. And thanks to intelligent algorithms that compare diagnoses that have been done in the past with the current medical imaging, they make it easier for the radiologist to detect types of cancer, and they detect it much more quicker. That's a company we like a lot, and we think that they now generate around 50-60% of their revenue in medical imaging related to artificial intelligence. And of course, cancer is a very important field for this company. So indeed, yeah, there's a lot of medical innovation coming from the US, as always, but also from Europe. And so we have some strong companies in Europe as well that contribute to technology, innovative technologies in the medical fields.
I just wanted to make a comment. I thought it was really interesting to see the composition of the team.
Okay.
And the fact that, combining the medical background and the financial background, mm-hmm. Is that a profile of person that is difficult to find, or are there?
Yeah, that's not so easy. That's not so easy. It took a few years to build this team. So we started with one fund manager almost 20 years ago with our biotechnology strategy. And then we've created a global healthcare strategy, and we've added three persons so far over the past years. And we're looking for an additional healthcare portfolio manager as well. And it's not very easy to find these type of profiles. But because as a client portfolio manager, I do not manage these portfolios, but I'm also part of the investment committees. And I can assure you, I can follow 10% of the meeting. So they really talk about molecules, and they eat medical data all day long. It's quite impressive. And then you have, of course, the two portfolio managers that use the advice of the analysts and put it into practice to a financial portfolio. So no, it's not easy at all. And we're looking since the beginning of the year, once again, for additional portfolio managers. So this takes some time, but we need it in order to continue to follow all the innovations that come to the market.
I have to admit, I asked the question from a personal perspective because my daughter is studying biomedical engineering,
okay.
And she's going to go to medical school afterwards. And I actually showed her, not this example, but I will tell her about this example of this is what you can do with a medical degree.
Yeah, absolutely,
And,
absolutely.
That's very interesting. Okay. I also wanted to make one additional comment. I think that it was really interesting. We talked about innovation today a lot. And we saw and heard a lot about innovation, but I thought it was also really interesting to see the model that you use for the management fees in terms of the 10% of the management fees going to fund cancer research projects. So I think that was a model that would be good to see, obviously happening elsewhere.
And that's not only crucial for cancer research and innovation, it's also crucial for us to build a portfolio, because when you see that big pharmaceutical companies are acquiring all those small early stage companies, at one time you might run out of companies for your investable universe. And thanks to these donations, we can also support those type of companies going to the market later.
Okay. Well, if that's it, I thank
you very much.
Ken, it was an excellent presentation.
You're welcome.
Really
It was happy to be here.
Thank you. Thanks so much for coming here. So maybe I'll just to spend a moment just finishing up. Again, thank you to our excellent speakers, to the Luxembourg Stock Exchange and to Candriam for hosting the session. Big thanks to the LuxFLAG team and the team at Lux Stock Exchange as well for making it happen. Again, innovation, really something we talked about, and I really was, I will walk away with a lot of knowledge and I think enthusiasm as well, and hope for the future in terms of cancer solutions, if you will, for patients. So I would like to end the session though with a quote that I hope will resonate with everybody. We saw that at the last slide that we showed on our LuxFLAG video. So it's a quote from Sachin. So we now understand that sustainable finance is not just another type of investment, it's a complete shift of mindset. I think we'll be seeing lots of interesting things going forward in that way. So thank you very much for attending physically. Thank you very much for attending digitally. Our next session actually will be after lunch at 2 p.m. hosted by NN Investment Partners, another asset manager, and focusing on ESG integration with sovereign fixed income. So thank you very much. Have a great day.